Don, this is a downdraft, basically a downturn everybody saw coming. We've got naked fear that's swamping the markets, but that's normal for a Dow that almost hit 27,000. What changed in the fundamentals?
So many people have so many different explanations for this. I think basically there's always something that you're afraid of. There's something that each individual investor is thinking is going to be the thing that's going to bring stocks down. So then when stocks come down, they assume that whatever it is they personally were worried about is the thing that did it. So some people have been worried about interest rates going up. Some people have worried about the FANG stocks having something go wrong with their fundamentals. Some people are worried about the trade war with China. So, you know, this failure has many fathers, as we might say.
So we do know that 2/3 of the S&P are either in correction or bear market territory versus their 52-week highs. What's your forecast going forward?
I think stocks are going to probably have to trade lower, and for that I use my most reliable indicator, which is I'm not terrified yet. And I guarantee you that when I am terrified, that will be the day of the bottom, and I will let you know.
All right, so it's sort of like go right ahead and try on any reason that fits your narrative or fits your opinion. I mean, but the real thing that I think is happening is Wall Street is starting to take a look at guidance and earnings report, Don. And for the first time since the financial crisis, we saw many internet companies miss their sales targets last quarter, and they're worried about the FANG stocks moving forward. They're decently in correction mode.
You know, of all the different explanations, the worries with the FANG stocks, I think, are very salient in my mind. I'm not an investor in any of them, but they have been market leadership for 4 years. Every bull market has leadership. And people follow the leader, and when they lose faith in the leader, they just lose faith completely. So what have we seen in the last couple of weeks? We've seen Elon Musk of Tesla smoking dope on TV and getting in a tweet war with the SEC. We've seen Bloomberg publish a story saying that Apple and Amazon have been using circuit boards in their data centers with Chinese spy chips on them. We've seen Google have to shut down Google Plus, its failed competitor with Facebook, because it turns out that there have been privacy breaches for 6 months that, oh, well, we just didn't tell anybody, right? So these are things that all attack both the fundamental business models of these leadership companies and the personalities of the messianic figures like Elon Musk who lead these leadership companies.
It's a great point, and
so
I'm just
sentiment is so fragile.
Sentiment is very fragile. We know Facebook and Netflix are solidly in correction territory. Here's the backdrop. The market has been in a complacent, sweet spot since 2009. We're actually back to July levels. We had zero volatility in 2017. The market tripled since 2009. That's a perspective, right, Don?
It is, but part of the perspective is remember what the world was like in 2009. We'd had a 57% correction in U.S. stocks and an even bigger wipeout in earnings. So we got our bull market the hard way. We got our earnings back, we took them to new highs, and we are really not at all that crazy a PE multiple. So this bull market has been earned every step of the way. This is not some kind of crazy bubble like 2000 where people are bringing companies like petfood.com public. You know, at least Tesla does make a car, and it's a pretty good car.
And they're starting to get earnings back behind that PE multiple. Don, it's great to see you. Thank you so much.